Hey everybody, Preston Brent here with our Trader User Group Weekly Roundup. This is for the week ending May 22nd, 2015. I thought I'd get it out early this weekend. We've got a nice holiday weekend, long weekend here in the United States with Memorial Day on Monday, so markets will be closed until Tuesday. So I'll make this an abbreviated version. What I've got on the screen here are the E-mini S&P 500 futures, and as you can see, I wanted to take a step back again. I've got it on a weekly chart. This is the low point for 2009, March 2009, and you can see where we are right here. We've had a very strong run, just a very strong run in the markets. And I've got a Fibonacci on here. What I did was I ran it from the high point to the low point right here, and you could see that a possible pullback that I believe is likely is 1794.90. Now, when I say likely, I don't mean next week, but I do believe that's a high probability. From the current price that we're at now, that's about a 15% pullback. And we got a lot of things on the horizon that could precipitate this kind of movement. But I just wanted to show you, where we've come and just how far we've moved, and the not only the speed, but just the ascent angle that we've moved. If I come on here and let's say I add the some trend lines on here, and I'm going to add this trend line right here, and you're going to see that essentially I can put two trend lines on here like that. So we've been staying inside this trend line very comfortably, really, right at this point here, towards the end of 2011. And then we've just kind of stayed inside this trend line. But I do believe we're starting to run out of steam. As you can see, the MACD is showing tremendous bearish divergence, as I like to call them, beds. We've got this setup here on this weekly chart that would suggest that the upside, I had told our members that the upside was probably no more than 2%, but I said that back when we were around 2115, 2120. So that would put our upside around 2150, possibly up to 2160. But then the downside can be, as you can see, as great as 15%. So there's more downside risk, clearly, than there is upside risk of 2%. Now, we're comfortably right in this center here, but I wanted to show you this, that, all things come to an end, and I see this as a natural support point for the markets. And then clearly the next one down, 38.2%, would be 1581. And 1581 is very close. If I were to extend this all the way over, it is very close to the highs made in the late summer of 2007. So we've got, and my screen is flickering, so it's just the way I guess I'm having some issues on it, but that's okay. We'll get through it. So this is what I'm looking at for the market right here. And so there is greater risk to the downside, clearly greater risk to the downside than upside risk. Now, the other thing that I wanted to show here is if we take it down, and let's put it on the daily chart right here. Well, before we do that, one other thing I wanted to show you. You can see also in the RSI, we're getting this bearish divergence. You can see it's very visible to the eye, that bearish divergence as we've been moving up. So there's a divergence in price action versus a divergence in the indicator. This always shows now how that there's more weakness in price on a go-forward basis. What it doesn't say is when the down drop will start, and it doesn't say how long it's going to take. Okay, so these are how deep it will go. But I do believe we got more downside risk than we have upside risk at the moment. The other thing I wanted to show you is let's take a look at volume here. And I've got, again, this is a weekly chart. I'll open it up just a little bit for you. And you can see on this weekly chart, if I put in here a line that separates 2015, right? This is this line right here, that roughly January 1st, 2015. You can see here volume has just been again going anemic as well. I run a 520 EMA on my volume, just like I run EMAs on my chart. I can run them on volume as well, and you can see the 5 is below the 20. So near term, pretty much for this year, volume has been anemic. And that's not a good sign as we're moving up in price. We got anemic volume, we got bearish divergence in the MACD and the RSI. So again, folks, you need to be careful in this market. I mean, you need to be very, very careful. If I take this down, we'll put the MACD back on. I'll take it down to a daily. And then I'm going to, on this chart here, I'm going to put on some other indicators that I got that'll just, kind of muddy it up a little bit, but you're going to see here what I've got going on the screen right here. You can see in this situation right here on this daily chart, the highs for this year are 2134, this red line here. The opening price for the year is 2055. So, we're not even 100 points off the opening price this year. So we're not up that much, right? And then the lows made for this year are down here at 1970. Now remember, I told you that a pullback up till about 1974 on that Fibonacci. So this number is going to come into play again, I believe. I can't tell you when. And on the daily chart, you can also see we've got this MACD divergence setting up as it's going down like that bearish divergence on this trade. So, there's just a lot of things on the chart that would suggest to me that the market is gearing up for some more action to the downside. Okay, that's the way I'm looking at it right now. If we look at the Nasdaq, which has been the stronger, as we went into the last 30 minutes of trading today, the market's got a lot weaker. But you can see here on the Nasdaq again, on this Nasdaq chart, you can see we got a high and a higher high, and we've got that bearish divergence. I thought it would take out that high today just to peek its head up. It didn't quite make it, but again, it's setting up for bearish divergence. All right, so we haven't taken out the highs for Nasdaq futures for this year. I mean, we just have not done it. So we're close, but we haven't been able to take it out. Okay, so that's a little bit about where Nasdaq is, and then of course the Dow. If we look at the Dow futures here on a daily chart, you can see again we made a high back on May 19th, just earlier this week. But again, we've got this bearish divergence. It's showing up across all indexes, right? We got a high and a higher high. There's a little bit of noise in here, so it doesn't make it as clean of a divergence as I would like, but it's still divergence nonetheless. And if we come in here and we just see where the market action is going to take us, I do believe that with this weakness here and very low volume, because if we look at volume here, you can see just how low the volume is really over the past week and a half. This is a daily chart, but you can see where it really fell apart. The 5 is below the 20, well below the 20. Now this was a low volume day just because everybody was taking a long weekend. But this does suggest to me that the markets are setting up, and we got a short week next week. We got GDP, a second revision of Q1 GDP next week for the U.S. So we got a lot of things that can take this down another couple of points or a couple of percent fairly quickly. The other thing that I've been looking at is the Dow Jones Transports. Look at this right here, guys. This is ugly. If we look at the transports, this red line up here shows the high for the year of the Dow Jones Transports. This blue line shows the opening price for the year. So the high for the year and the opening price for the year are almost identical, maybe 60 cents apart. This red line right here actually, and let me just adjust this because it's not quite accurate. As of today, this was accurate, but when I blow it up just a little bit, I will show you that now we made a new low in the Dow Jones Transports today. Okay, we closed a little bit higher, but it is a new low. intraday low of 151.65. So the transports are clearly not holding up their end of the bargain. Something's got to give. We can't have the transports continuing to go down and the equity markets continuing to grind higher. Something is going to give. Now, I thought when we got this bounce back over here off this 200 EMA, which is the yellow line, and it moved up above and closed above the 50, we were going to come back up and normalize and catch up with the rest of the markets, but it gave it back up immediately. And you can see, I'll try and draw this line with my pen here, but you can see this pattern right here setting up. You know, it's a descending triangle. The odds favor a break to the downside. The distance traveled for the break would be roughly that distance right there. And, you know, if we extend it to the downside, right? I mean, if let me get my pen squared away here. If we extend it to the downside, it's going to put us around this range right here. Okay, right around that support range right there. So this is really setting us up on this descending triangle to break and make that traverse that distance. If we come back down here like this, then it's going to get very ugly in the equity market. Now we haven't broke yet. I mean, we could, the odds favor a break to the downside, but we could break back up again. But the odds do not favor that. And we got to put the edge in our corner, and that's what we got to look at on the chart. So I wanted to show you where some of these things are sitting right now. The other one that we're actively engaged with is the bond market. The bond market finished down a little bit today, but it's been down dramatically. It's trying to find a bottom here. We've got a lot of support in this bond market at the 151.28 level, as you can see right here on your screen. We've got a lot of support at that level. And we had this move up, move down, move up. We may come down and do another tap here, or we may break, and then we may just come on down and test this upsloping trend line here. We've been short the bond market here. We've been enjoying it. It's been a great trade for us. My original projection was to have a completion of this 3, 4, and Elliott Wave 5. I think this downward move here is not profit. When we got to right here, it's probably profit taking, but once we came down here, that's a lot of distribution. So that could destroy this 3, 4, 5 pattern. I don't see us getting back up to that level. I see some counter trend rallies just because there's a lot of shorts in this trade right now. Okay, I did tell our members that we could probably get up to this area and then we'll probably come back down again. But that's all I see right now in this. And if we look at TLT, which is the ETF that moves in the same direction as bonds, you'll see that we're on the lows or very near the lows for TLT as well. If I move it over here, you can see the red line, which is the lows. Let me just get it over here like this so that you can see. That's the lows for the year for TLT. It's sitting right at about 118.20, 118.21 area. And you can see we've been short this thing most of the year. April was a bad month for the bond market and TLT. It gave it all up very quickly. I do see this pattern makes more sense for me where we've got a 3-leg. We'll probably get a little bit of a head fake here, counter trend. Everybody's short, so we'll get that counter trend. And then we'll come down here and possibly complete that pattern. That's kind of what I'm looking at right now. If we do not move up very far and then we reverse and come down and take out that pivot point, then this 3-leg will shift over and we'll just keep right on trucking. Okay, so again, bonds is not necessarily correlated with the equity market. We can have a day where both bonds and equities are down hard. So we're in a strange environment right now with a lot of money sloshing around the US, Japan, China, the ECB, across the 19 countries that make up the ECB, and the UK. So this is where we're sitting right now across these majors. Also today with the CPI numbers out, the dollar moved up very strong. So I've been bullish longer term the dollar. This was a lot of profit taking right here and some distribution in the dollar. But it looked like it regained the 50 EMA. I think the dollar is going to kind of have a longer period here before it moves back up. It's going to be one of these kind of things like this, you know, and then we'll probably come up and come down and do one of these kind of things, but then gradually it's going to work its way back up again. Okay, and it may give us one of these kind of cup and handle patterns, and then boom, off we go to the races over here, right? Uh, and why are we going to get this? Because the Feds, Janet Yellen spoke today this afternoon, and she said that the Feds are prepared to raise the rates probably 25 basis points later this year, but then they're going to take a measured approach after they do that, which means it could be a long, drawn-out affair before the next interest rate bump. So that means there's going to be a lot of volatility in the currency market as market participants try and anticipate when this next interest rate rise is going to be. Right now, the markets have pretty much priced in a 25 basis point rise in the interest rates towards the end of this year. And we're still going to get a movement down in the bond market and a move up in the dollar, but it's priced in a lot of that move. By the same token, the euro fell very hard. You can see the euro is moving back down. It moved back below the 50. I've been more bearish the euro. The British pound, we've been bullish, but it moved down. And we're coming down to my little targeted area for the euro. So I'd like to see for the British pound somewhere in this area right here, I believe. And then it may, form a 4-leg, and then we're going to come back up here for a 5-leg, something like that. So I'm more bullish the pound than I am the dollar. And from this high pivot to this high pivot, there is no bearish divergence. So it's, to me, I think the bottom was made back here. We took this trade. We made some good money, and then we got stopped out a couple of times right here, but we got stopped with profits, and then right here we got stopped with profits. But now I'm calling for a little bit of a pullback. To some extent, the pound is going to move with the euro because they're kind of trading partners, big trading partners. But this is where we're sitting right now with these two key ones. Now we've got a lot of other things going on in the ag market, the oil market, the energy market, and the softs and the metals, gold and silver. We got a number of trades going on there. If you're not a member of our group, I would highly encourage you to come on in and check us out. Got a lot of good things going on. For our American members, have a really great, safe Memorial Day weekend. For everybody else, we will see you on Tuesday. There will not be a Sunday night session for our members because of the holiday weekend. Have a good one, everybody. See you guys later. Bye now.